Good morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, April 17th. Friday is a holiday, Good Friday, so there'll be no video on Friday. Obviously, we'll be putting them out starting on Monday. So we get green across the board. Dow Jones, NASDAQ, S&P, Russell, all up, relatively up about 1% or so. NASDAQ up 1.29%. And then we have, not before we get a market sell-off, a pullback into about 11:30ish, and then we made that low, and then we rallied again. So the intraday volatility continues. It's very difficult to position yourself for the trend for the day when you're not knowing if the market's going to reverse on you again and you're getting stopped out. So I always say, when in doubt, stay out. Cash is a position, and I always say that wait until you get better setups. No need to start paying the clearing agents your commission money. So take a step back, see what happens. Now, we did get that holiday reversible. Again, it didn't come with a nasty price of extreme volatility this week, and today is going to be nothing more but the same. And that's why be really careful. Today is the last day of the trading day, so a lot of the bigger players are gone. They're off their desk. And don't forget, Monday, we have Easter Monday in Europe. So it's really, believe it or not, a 4-day weekend, because Monday is going to be extremely light as well. So keep your eye on the extreme volatility, okay? All right, so we get a rally. What do we do? Are we ready to challenge the highs? Well, not quite yet. Next week's going to be very interesting, and I still say that there's going to be a lot of opportunity. The markets are in the topping process, I believe, and I feel, and I still feel this way because of what the bonds and the yen, the 10 years doing. There's a lot of warning signs out there, but not. The most important is price action. The price action is obviously telling us that it looks like the markets want to go lower. So until otherwise, I am going to be looking to start getting aggressively short at the 1860-ish area. And what I mean by that is, so I'm going to be legging into short trades. I'm not going to be obviously all in one spot. I'm going to leg into a short trade and see if that works. We're going to probe the market first, and then if that works, then we're going to continue to start adding shorts and any rallies and we're going to be looking for extreme weak stocks that have not really rallied in this last couple of days. That's the stocks that you want to look for. Okay, to put on shorts. Now, and the reason why is the bonds. Take a look at the bonds. Bonds have now broken out of a large trendline resistance, which now is acting as support. And you can see bonds are up again. Nothing big this morning, up one tick. But you can see that right now we are just creating this ascending triangle on a daily chart here. And we had some nice volume here the last couple of days, a little bit average, more than average on the 50. So you could see this ascending triangle now looking to break out higher. So I like bonds here, and if the bonds are going to go higher, money's going to flow out of equities. Okay, so just keep that in mind. Remember, anything can change between now and the market opens, or between now and next week. So just be aware of that. Things are changing really, really fast here. So please be aware that what we say in the morning could actually change in the middle of the day. Again, yens, the Japanese yen. We are looking at an ascending triangle. We're looking at a bull flag. We do have a big cluster up here and resistance to get the 200-day moving average. But if the yen breaks out, I think it'll take out this cluster easy and then start to I'm looking at targets way up here. If that happens, you're going to have a decent sell-off in equities, okay? So the Japanese yen looking constructive again to the upside, and we have now broken back into this ascending triangle, or if you want to call it a symmetrical triangle, but we're in it now, and we are holding above the averages. So again, bullish with the bull flag pattern. So just a word of caution. Okay, so I said yesterday in the video I like the 58.65 to start legging into a short. Sure enough, it hit it almost to a penny, and then immediately sold off. I mean, literally one spike candle low, and then that was the end of it, and that was at the end of the day. So we couldn't establish a short position. So today's going to be interesting. I'd love to see a gap up and then market fade going into today, and that would really set the tone for next week. However, there's a lot of weak stocks that are still out there that have rallied, so we could still probably play them to the downside. But again, today's going to be a little tricky, so we want to take it one step at a time here. All right, we have our overlay, and as you can see here, we have the S&P moving up. Now, gold really has really had some selling but is really holding up okay. But look at the bonds. Bonds and equities cannot go up together at one point. They can do it for a little bit, but sure enough, somebody's going to be right here, and I think it's going to be bonds, at least for now. Spiders. Okay, so now we're back up into this area here. We have a nice 2-day rally. The other couple of days really didn't do too much. We really haven't done much of anything, but we did get a nice big spike up. Now, here's the 20 on the spiders. Now, this is going to be a good spot here. I want to see where this closes, because if we can get a movement back to the downside, get back below the 20, that's going to be a good spot to look to short and look for a downside target of this trend line here, right in that area. Okay. Now take a look at the transports. Transports did okay yesterday. They actually held, which is the leader. But look at the volume. Volume was very light. So you're having these volume spikes, but they're not anything to write home about. So we have weaker volume on rising prices. That's not confirmation for me. And as you can see here, look at the IWM, very, very weak. I would be looking at shorting the Qs or the IWM if you're looking for an index to short. And the Russell is definitely one that is you can see this clearly. The market is very, very weak here. Qs, same thing with the Qs. Back not even above the 20. I'd love to see a gap up right into this area, 87.30, and I would be a short seller in this area with the stop right above. And there's the Qs. And diamonds actually had a better day than the other 5 indices, believe it or not. Now, we have IBM that reported last night that missed earnings estimates. Google last night also missed. So the Qs and the diamonds, you're going to watch them for a weakness going into tomorrow, as well as all these other technology stocks. They've actually bounced, but they bounced on weaker volume. So really kind of pathetic. You got the LinkedIn, Google actually was down at one point, down like 3-4, maybe more percent last night. And then you got Netflix and all of the other high beta names that are really just kind of bounced but didn't do much of anything. Okay, take a look at USO. USO I like, and I tell you, I would love to get a pullback to the back into this 20, and I would be looking to buy. I want to make a higher low from here, and then I look to buy some options on USO. Definitely a good trade here. And here's the XLE. You can see how this just literally exploded to the upside. Okay, guys, that's really about it. Let's keep it really light today, but there are opportunities out there, and once we get through this, once we get through the holiday, Easter holiday, I think it's going to be a really good couple of weeks going into May. Remember that sell in May, go away. We do have seasonal weakness coming right now, approaching the last 2 weeks of April and going all the way into May, June, and then we get that choppy seasonal pattern in the summer months, okay, when we have lighter trading volume. Okay, guys, have a great day. Enjoy the weekend, and we will speak to you on Monday.